Hey guys, it's Alex, and welcome back to my channel. Today we're going to talk about something that can be a little intimidating for some people, and that's investing. But don't worry, we're going to keep it simple and talk about the different investment vehicles out there and their pros and cons. So what are some of the different investment vehicles out there? Well, there are a few main categories that you should be aware of: stocks, bonds, mutual funds, exchange-traded funds, and alternative investments. Stocks are ownership shares in a company. When you buy a stock, you're essentially buying a piece of the company. The value of the stock can go up or down depending on the performance of the company. Bonds are essentially loans that you make to a company or government. When you buy a bond, you're lending money to the issuer in exchange for interest payments. The value of the bond can go up or down depending on the creditworthiness of the issuer. Mutual funds are collections of stocks, bonds, or other securities that are managed by a professional fund manager. When you invest in a mutual fund, you're essentially pooling your money with other investors and diversifying your portfolio. Exchange-traded funds, or ETFs, are similar to mutual funds in that they're collections of stocks, bonds, or other securities. The main difference is that ETFs are traded on an exchange, like stocks, rather than being bought directly from the fund company. Alternative investments are a catch-all category for investments that don't fit into the other categories. This can include things like real estate, commodities, or private equity. So what are the benefits and drawbacks of these different investment vehicles? Let's start with stocks. The main benefit of stocks is the potential for high returns. When a company does well, the value of its stock can go up, which can lead to big gains for investors. However, stocks also come with the risk of loss. If a company doesn't perform well, the value of its stock can go down, which can lead to losses for investors. Stocks are also more volatile than some other investment vehicles, which means that their value can fluctuate more dramatically in the short term. Next up are bonds. The main benefit of bonds is relative stability. Because bonds are essentially loans, they tend to be less volatile than stocks. This can make them a good choice for investors who are looking for a more steady stream of income. However, bonds also come with the risk of default. If the issuer of the bond can't make its interest payments or pay back the principal when the bond matures, investors can lose money. In addition, bond prices can go down if interest rates rise, which can lead to losses for investors. Next are mutual funds and ETFs. One of the main benefits of these investment vehicles is diversification. By investing in a collection of stocks, bonds, or other securities, you're spreading your risk across a wider range of assets. This can help mitigate the impact of any one investment going down. However, mutual funds and ETFs also come with the risk of loss, as well as management fees, which can eat into your returns. In addition, the value of these investments can go up or down depending on the performance of the underlying securities. Finally, let's talk about alternative investments. One of the main benefits of these investments is the potential for high returns. For example, real estate can appreciate in value over time, and commodities like gold can go up in price. However, alternative investments also come with a high level of risk. Real estate, for example, can be affected by market conditions and natural disasters, and commodities can be subject to supply and demand fluctuations. In addition, alternative investments can be more difficult to value and sell, which can make them less liquid than other investments. In conclusion, there are many different investment vehicles to choose from, each with its own set of benefits and drawbacks. It's important to understand these differences and to consider your own financial goals and risk tolerance when deciding which investments are right for you. If you have any questions or need help getting started with investing, don't hesitate to seek professional financial advice. Thanks for watching, guys. I hope you found this video helpful. If you have any questions or would like to learn more about investing, be sure to check out my other videos on this channel. And don't forget to subscribe and hit the notification bell so you never miss a new video. Until next time, take care. Thanks for watching.